Mm. Well, well. What a day, huh? Bitcoin no, not now. Now's not the time. Bitcoin makes a nice little flavoursome move to the upside. A lot of people are getting a little bit pumped up right now. There's something brewing, all right? And it's in plain sight. Am I here to take away the joy? No, ladies and gentlemen, but we don't want to be king for a day. I mean, kind of king for a day. It's all right, but we want to reign supreme. We want to take the throne and just be with it all the time. Ladies and gentlemen, we stumbled across something earlier on this evening while I was doing my research, trying to piece together what information can I give you guys that is going to maybe make something click. Well, we've firstly got a Bitcoin price prediction that is very important that we must take seriously. Seriously. But it kind of works with what we're talking about. But a few of you are saying never, it could never happen. We're going to be talking about this Scotty Pippen dream very shortly. But we've also got the GDP or the GDI revision. Do you understand what that is? We just recently had the labor market revisions. They got that wrong. Now they're talking about how realistically is the economy doing. Now they're revising it lower. Is this going to be something you need to be concerned about? Quite frankly, ladies and gentlemen, I would be. A top analyst or hedge fund manager who's been consistently correct with his bullish calls has now turned around and said 10% drop in the stock market is due. Could lead to more with this revision. What's good, Zeta? Arthur Hayes has now come up and said that Bitcoin is going to go to 50K. Hold on, Tino, man. You're coming out with these wild predictions. We got $80,000 Bitcoin by September the 18th. We've now got another Bitcoin prediction, which is only 4K more than what we are suggesting. Now we've got a 50K Bitcoin prediction. Aren't you guys going crazy yet? What's it going to be? Well, we've got weight to add with this, because if this historical event is repeating itself, we are going to have a problem. But Bitcoin is going to go out with a bang. We're not going to get the move yet, but it's something that is pending. So please, if you are new to this live stream and you're only interested in Moonboy status, hear what we have to say and then consider if you are going to be on the moon or we're going to end up on Pluto. Where is Pluto in relation to the moon? Is it to the left and down, or is it up and to the right? You're going to have to help me out, all my astrologers in here that follow the moon cycle. But jokes aside, ladies and gentlemen, just to get you guys all geared up and ready for the live, we do have something very important to talk about. And if this does come into fruition, we are going to have a problem. If you are new to the channel, bear with me. Let's have a conversation, man. What's this guy? Why did I not move this? Here we go. Treasuries soar as the job fuel bets on a jumbo Fed cut. So this is what happened today with me. I did some trading and I was witnessing the madness that was unfolding on the NASDAQ. Now, let me show you where I expected price to go. Okay. I shared this setup earlier on today. Okay, we did share Euro and gold, but Euro completely went. I was expecting Euro to make a move to the downside towards the daily open and then try and retrace to then continue lower. We got the move to the daily open, but then the news came out and Euro shot up. So if anyone exploited that in the membership, happy days. If you did and you didn't pay yourself on the retrace or you were holding on towards the news, that might not have been a good story, okay? Same thing with gold. We wanted to see gold try and come down. They did come down ever so slightly. I wanted to see them come to the 2,473, and then that principally then sent gold to 2,400. 482. It was a bit of a wick move, nothing fancy at all, but then they just shot back up, okay? So that kind of got invalidated. But Bitcoin, I mean, oil just made the move to the upside. We wanted to see oil effectively build shorts from around the 71.78 region to see it come back down to 69.26. And then we effectively saw oil come back down. I mean, the update got out. I tried to get the update out as close as I physically could towards the news to give people enough time, but oil started to make the narrative down and they came in towards our projected zone in principle. And that was a happy days on oil if anybody did take it. But you can see we're trading back into the vectors. But the stars of the show were cryptocurrency. This was NASDAQ. I'm going to talk about my trading today on NASDAQ to bring you guys to a bit of an attention on that. But Bitcoin, we wanted to see Bitcoin make the move to the psychological low, and we saw Bitcoin take the psychological low and some, okay? It did pretty well. Nice little pump to the upside. Happy days. If you paid yourself, congratulations. But we did see a little bit of a retrace, which is going to be revealing in tonight's live as to what we could expect next. Going into that, we did have Ethereum as well. Wanted to see Ethereum make a little bit of a pump where I was suggesting that you could effectively run some shorts from this range around the psychological low. And then we go over to Ethereum. You can see she did make the move to the upside, and then she has pulled back. So if you did exploit those psychological range shorts, congratulations. But now you're at a bit of a flat line, so just be very careful with that, okay? And then finally, Solana. We wanted to see Solana make the move down, try and hold out on the Asian session low right here, which is at the 126, and that's the Monday session Asia low. Okay, so that's really important. And when you go over to Solana itself, you can see that Solana came down. It didn't do too well in the sense where it didn't go beyond the Asian session low, but it came down to only shoot back up and hit the target, which we really wanted, 132.22, and they ended up going to 135. Happy days. Now, before I get into all the madness, because this thing right here, ladies and gentlemen, let me just show you, this is a problem. So stick around for this. You want to listen to what we got to say about that. Check this out. Today on NASDAQ, I shared this projection because I wanted to see NASDAQ break the ranges, okay? And I shared the idea that if NASDAQ broke the Asian session low, we would see NASDAQ build up steam to go lower. If it broke the Asian session high, we would then see NASDAQ build up steam to go higher. When we go over to the NASDAQ itself, ladies and gentlemen, you can see it got a little bit tricky, okay? Look at this. They did not take the Asian session low. If you entered on the break of the vector candle region over here, you would have seen some profit, but at the same time, you would have then seen price come back down, which is effectively what we were looking for in the setup. The move up, and then afterwards, we would have anticipated, this was in the update that I did earlier on after the New York Live, see it come back up to try and make the reversal back down again. Now, I traded this logic today, and I was waiting for the news to come out. As the news came out, which was this candlestick here, the idea is that the jobs data that came out showed 707,670,000, okay? That was a bad reading, but a great reading in relation to the rate cuts, because it now means that the Federal Reserve has to start cutting the rates, because if we're going to see people losing jobs, that means the economy is really going to slow down. We know that the manufacturing sector is contracting. Okay, we know it's contracting, and it has been for the past 5 months. So it's starting to get a little bit of a problem for the Fed. They need to cut these rates. And today's move to the upside effectively was retail traders and traders across the board with the belief that we're going to get the rate cuts. Okay, I was trading this logic today, ladies and gentlemen, and I'll just quickly show you the positions that I had. So this was what my screen looks like. I did 2 plays today. I traded on a funded account. That is a performance account with Apex. Can you see that at the top? We made $3,195. But this right here was a copy of a trade that when I say copy, I just simply opened the trade here, and I had the trade already open on my personal live account on NinjaTrader. So today I took around, it was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades today. And they were all, in principle, they were all wins. And what we had effectively was, this is how it worked out. Okay, so we ended up having, this is a live account right here, as you can see. Yep, happy days. So we ended up with $4,174 on our personal account, which takes us to net around $7,370 gain for the day trading NASDAQ on the news announcement. So once the news came out, I effectively started playing the news and took my trades. I only used one contract, ladies and gentlemen. Just look at it. I'm trading one contract, quantity one. I scaled in, as you can see right here, scaling in, added to it, but max was 3 contracts. Still come out using small size. This is the power of using small size and then volume. Small size, 13 trades, 7K for the day. Okay? So when you're trading, especially an asset like NASDAQ, my entry point on the NASDAQ itself, 18,881, but I was shorting NASDAQ because I was waiting for NASDAQ to pull back, and I managed to capitalize on the shorts to the downside, as you can see from here. So just when you watch the live stream back again, just have a look at the entry points, okay, on this screen right here, and you'll be able to just work out my entries and my exits, and you'll be able to try and understand my logic of why I was taking these trades, because all I was doing was price going up, breaking away because we were trading at the lows for the day, and they then recovered back up, took some vector candles, and then they came back down again and recovered the vectors. Happy days, okay? So with that being said, why am I coming across to you all as there's a little bit of a problem? The market's moved up. Stocks are pumped right now. Everyone was fine with regards to this idea of the Fed cut and it being a jumbo one. Let's get into the conversation. Check this out. Tom Lee, this guy's been a beast at calling these moves to the upside. Very bullish guy, okay? But he's now saying that the markets could drop 10% over the next 8 weeks, according to this forecaster, okay? He says it will be an ideal time to buy the dip, all right? Now, how long will it be for you to be buying the dip? Well, how far will price go down? He's saying 10%, but it could actually be more than that. But because we've got various things happening over the next 8 weeks, articles like this are going to be a problem for us. Now, if you are passing through and you're like, what's this guy talking about? Just stick with me on this one, because this is messed up. If you recall, not so long ago, we had the discussion on the labor details or the labor statistics having to be revised, okay? They were having to change them up and be like, look, we're kind of wrong on the labor market, like, right? And that caused a little bit of a problem for the marketplace. Right now, they're revising the real GDP and the gross domestic income data. Do you understand what that means? This thing right here, let me narrate it out to you. A large downward revision may be coming in the US GDP data. This is important. The difference between real GDP and real gross domestic income reached a record 616 billion. Basically, the reading is off by $600 billion. How do you do that? If the reading is off by 616 billion, that means the economy ain't doing too good. So they're effectively telling us that they do revise this lower, the economy's really, or has been, in a recession. And then when it comes to common knowledge, the markets are going to effectively wet the bed. Going into it, it says historically, the GDI has been a leading indicator of the final GDP data revisions and the unemployment rate primarily near the end of economic cycles. Currently, GDI suggests that the real GDP could be overstated by 600 billion. So the economy isn't really doing too well. However, by the time revisions are made, attention from the current GDP numbers has shifted. You scroll down, courtesy of the Global Markets Investor has says that in 2020 and 2001, it took over a year to get the final estimate for the first quarter of GDP. It was revised plus 2% down to minus 1.3%. In other words, it took more than 12 months to find out that the US economy had fallen into a recession in quarter one. How is it possible that these people are in charge of money? They're getting their data wrong? Can you appreciate now why I'm at a point now with, I mean, look, they got it wrong with the jobs numbers. Now they're getting it wrong with the GDI and the GDP. Please, bruv, that is just screaming a problem. It's already been there, though. That's the real problem. That right there. So we're adding this, which is $512 billion worth of unrealized losses by banks. Go and Google, ladies and gentlemen, when you're finished with this live, go and Google how many bankruptcies occur in terms of bank bankruptcies. You're going to see a list, man, and it keeps happening and happening and happening, but they don't talk about it too much. Okay? Hold on. Wait a second. Let me just introduce something else. You think that's bad news? Okay? Well, just going over to NVIDIA, just for a split second, because I see you guys talking about NVIDIA, all right? And do you remember not so long ago, this dude right here sold $580 million worth of NVIDIA stock? I'd probably be playing baseball if I did the same thing, all right? Did that it was only last week. When was it? He sold 580 million. You just go and Google it. He did it. He sold a $580 million worth of NVIDIA stock. Now he's playing baseball. Happy days. You go into price action NVIDIA and you can see it's just taking a shoe back to the downside. And it's coming back down to that vector candle, ladies and gentlemen. That is a problem for us. It's a problem. Okay? But it doesn't stop there. Of course, you may have heard about Harris and her plan to tax unrealized gains for only people that are worth $100 million. So that's around 10,000 people in the US that are worth more than $100 million. And yeah, it's been deemed as the most wildest thing on earth, something that has never been done in history. So is it a stunt? Who knows? Who knows if it's a stunt? But this is a problem right here. Now, how does this relate to Bitcoin? Well, the implications of this being revised means that the economy hasn't been really performing the way the Federal Reserve has been relying on it to be performing. They've been spinning us a wheel or a yarn to suggest the idea that the economy itself is doing okay, so we don't need to worry about cutting the interest rates. Earlier on today in the live, we were talking about a 2 full percentage point cut. Well, if that is where we are with the economy in terms of the GDP, then you know the Fed ain't going to just be cutting 2%. They're going to want to do as much as they can to avoid the market to going into a recession. Sorry, we are in a recession. We're minus $600 billion in terms of economic output, okay? Or creation of services, products. How much money is the US actually making? They're at a loss. Now, this is where I get into cryptocurrency, all right? So please, just stick with me on this. But you guys may have been hearing me talking about Bitcoin to 80K on September the 18th at around 8 p.m. And it's not no magical thing. It's because September the 18th is the rate cut. There will be an aggressive move, okay? At 8 p.m. is when the FOMC press conference realistically will be finishing, okay? 80K is the price projection. I've only got a few more days before it happens. And there's lots of data that is due to come out, which can impact the way Bitcoin is going to move. But ladies and gentlemen, can we just please commemorate the fact that Scotty Pippen has decided to come out and say, as one of the greatest basketball players of all time. All right, here we go, chat. Some of you are going to say, all right, here we go. Maybe not say Pippen or Jordan. For those who know, no. Pippen or Iverson. It's Iverson for me. That's it. Iverson. Anyways. Pippen has turned around and said that Satoshi Nakamoto has visited him in his dream. And last night predicted that Bitcoin would be at $84,650 on November the 5th, 2024. Not financial advice. That was his tweet. That just, it makes life a little bit easier for me because that sits in line with my projection, but he's out. I mean, he's on November the 5th, and that's when the election in principle comes into play. So, I mean, see, I know you knew. I knew you guys knew. I knew you guys knew about Iverson all day long. I didn't have the same dream, ladies and gentlemen. No, I didn't have a dream. But Pippen has. I mean, can you take it seriously? I mean, this guy is, from what I know, he's actually, hold on. Scotty Pippen dream. Just look at this. Where is it? He is actually, Look at this. Where is it? The history of a dream. He's on a sleep app talking like, and then he tells us about a dream he has. For God's sake, man. What a way to pump Bitcoin. What are you dreaming about Satoshi for, man? But let's get to the business. Arthur Hayes has come out with a prediction of Bitcoin at 50K. Now, for all my statistic guys, stick with me on this one because this ain't about no on-chain analytics. Arthur's decided to come around and talk about the good old Fed overnight reverse repurchase agreements, the RRP. What the hell is that? Says here, Arthur Hayes put out and says that as soon as the reverse repo program started rising to the tune of 120 billion, Bitcoin swooned. A rising RRP sterilizes money as it sits inert on the Fed's balance sheet, unable to be re-leveraged within the global financial system. So the reverse repo program itself is the tool the Federal Reserve uses to manage short-term interest rates and control the money supply in the financial system. When the RRP rate rises, Bitcoin's price may drop as investors move funds to safer, higher yield options. Bonds. If the RRP rate falls, more liquidity enters the market, which can drive Bitcoin's price up. Starting to rise. Now, this is just the last 6 months. We've seen continuous rising. Would that explain why Bitcoin hasn't gone anywhere? Arthur Hayes does say in his article that there will be a little bit of chop. When we look at it on the daily time frame, ladies and gentlemen, we then kind of put things into perspective. How valid is this story about the RRP? Well, let's just zoom out. 2021 March, what happened? You might remember it. 2021 March, Bitcoin took a shoe bag to the downside, right? Started to. At that time, the RRP started to rise, started to move up. But every time it corrected and moved down, that's when Bitcoin started to consolidate. And when it consolidated, it started to move back up again. Then in November 2021, Bitcoin makes the all-time high. Go back into it. November 2021 was this peak right here, okay? Inside of this range. What happened from that point? RRP starts to rise and rise and rise. Bitcoin slumps for nearly a whole year. It started to drop again, didn't it? Bitcoin's price rises. Now this thing is starting to rise. But the Fed's got bigger problems because this is going to be a fuel. This revision on the GDI is massive, courtesy of the Kobasi letter, the Kobasi letter. Sorry, I can't say it, man. Whatever. But this is a problem. So when the RRP starts to rise, that's a problem for Bitcoin. The article does go on to say that assuming the Fed doesn't cut rates before September meeting, that ain't happening. He assumes that the TB yields yet stay firmly below these levels of the RRP. As such, RRP balances should continue to rise and Bitcoin at best will chop around these levels and at worst slowly leak lower towards $50,000. Now, remember, Bitcoin is a very volatile asset, okay? He may say 50K, but it can just drop and it can just then shoot back up again. At the bottom, it says that said, how about his current bearish stance? Hayes noted he remains long-term bullish on Bitcoin. Oh, for God's sake, I bloody hate that. I really do hate it, okay? You're always going to be bullish on Bitcoin. Who isn't bullish on Bitcoin? But what you're experiencing, ladies and gentlemen, is just different behaviors, all right? There's different instances with Bitcoin, you know? And you've got to really price that in. Bitcoin is experiencing its first true cycle of what it's like when the feces hits the fan, to put it into a polite sense. We've been like keeping an eye out on what's been going on, ladies and gentlemen. And if this thing's going to start rising, right, we're going to be checking in on this bad boy. If it keeps on rising, we're going to have problems with Bitcoin because investors ain't going to put their money into Bitcoin, given that it's now packed with Wall Street, with the ETF. All right. So now you look at your on-chain analytics and you're going to think, hold on a second, like, if I look at on-chain analytics and think Bitcoin's going to go up, or when someone talks about Bitcoin moving to the upside purely on the principle of a triangle, and then you look at something like this is not to condemn anyone that does that, but it's adding weight to what you are using or translating price to do. You're using the RRP, the measure that the Fed, the practice that the Fed does, okay? Which is, the goal is to prevent short-term interest rates from falling below the lower bound of the Fed's target range. So the Fed's there with this button, like quickly press it. Then this starts to rise, forces investors to start going into what? The bonds, because they don't want the short-term interest rates to be moving up too much. What does that mean? That means the yields. They don't want them going too high. You can see this bad boy's taking a shoe bag to the downside. 10-year bonds market pumping up, ladies and gentlemen, volatility in the marketplace. But the bonds have moved up. The stock market moved up, but then it corrected back down again. What does that tell you? Investors are seeking low risk. They took a little bit of a risk today on the hype of the jumbo rate cuts, but then they pulled it back, planted themselves into the bonds. So now we go over to Bitcoin's price. It's gone nowhere. Now, when I put the setups out for Bitcoin and Ethereum and Solana and what have you, I'm not going for crazy moves, okay? I'm not going for them. I'm just looking at certain points. There's your vector candle recovery right there, ladies and gentlemen. And Bitcoin did just that. They came and ate that liquidity. Go to the 15-minute time frame, wherever it was. There it is. You can now see what game are we playing, ladies and gentlemen, vector to vector. And that's how you know the market is not trending, because it's just going from one vector candle to another, one imbalance to another. Investors are not consistent. Where's the trend in the bonds? Where is the clear distinction that investors are favoring low risk or high risk? There is no trend in the bonds. It's going sideways. It's gapping up. It's gapping down. Money isn't really being put to work just yet. And we still got $6 trillion sat in ETF money markets, not Bitcoin. Normal money markets, your QQQs and the SPXs and all the fun and jazz games, the SPDRs, your gold and what have you. They're all sat there waiting because ETFs realistically don't really move too much, okay? And they sort of act as a hedge against what's going on across the board. Once they start pulling money out of those ETFs, effectively, they're going to start seeking risk, which then see the stock market moving up, which then sets us up for what's going on tomorrow. Tomorrow, ladies and gentlemen, we have got the ADP non-farm employment change. Yet again, another reading on the data. The JOLTS job openings data has come into play, suggesting that there is less jobs available. That could obviously go in line with what they're expecting over here. They're expecting a reading of 143K. If that is going to come into play and it actually is revised, and it actually comes in lower, the stock market will shoot. It really will move up, because then it will be the nail in the coffin that the Fed is going to give us the jumbo rate cuts that the markets are looking for, okay? So you've effectively got 3 bouts of data that are solidifying the idea of jumbo rate cuts. We had the first one today that solidified it. The NASDAQ moved back up, okay? We've got tomorrow's data, which is the ADP non-farm. If that comes in lower than 143,000, ladies and gentlemen, the market will love that. Dollar will go down. Euro will just keep on going up. Gold will then effectively try and move up again. And assets against the US dollar will continue to climb. The bonds market will effectively rise as well. The NASDAQ and the S&P will effectively rise, but then they will be pulling that risk and then putting it back into the bonds, which is why the bonds will keep going up. They're short term with their exposure. I know I said that a little bit fast. But then we get more data on the ISM. Now we've got this another story. We've got the services, final services, and then the ISM services PMI. Currently, as it stands, they are expanding because they're above 55. Well, ladies and gentlemen, if this revision comes into play, then that would undermine the Fed. And what the hell is the Fed going to be doing if it hasn't got the correct data? And how are they going to be making the decision about cutting the interest rates if the data is not correct? You've got a recession. If this GDI revision shows that the economy is down by $600 billion, you're going to be cutting interest rates pretty aggressively. What are you screaming for? You're screaming for inflation to shoot up, bruv, if you've got your readings wrong. So then we would lose faith in the US dollar completely, which explains why the dollar could crash, which means that Bitcoin in principle should be moving up. But then try and tell that to everyone in Wall Street, because that's what cryptocurrency is about. MicroStrategy is trying to induce the idea of investors to use Bitcoin as leverage, as collateral to go and borrow money and then put that money to work elsewhere. Well, it hasn't really got anyone interested because they want to do convertible bonds, and they're even considering a 10-to-1 stock split. And it's currently roughly around the same price as what Nvidia was before the stock split. Okay. So if they get a stock split, they get more people to buy MicroStrategy. Happy days, they get that liquidity and they go buy Bitcoin. It's a great business model, and they hold lots of Bitcoin, which is very, very valuable. But the problem is not everyone in Wall Street is copying and doing the same thing. What does that mean? No interest. That's the problem we've got. So again, now the guys that use Bitcoin and work out whether they should be buying it based on on-chain analytics and what have you, Wall Street, it's the legacy markets. They're always going to tell you where money is going. And as long as you align yourself with that, then make on-chain analytics secondary, because you're really trying to work out the journey of why an investor will convert US dollars into Bitcoin. I don't care what it does, what Bitcoin does in terms of on-chain analytics, how active a whale is, or how what's the miner's position index. All right, it does help knowing if the miners are selling, what are they selling into? They're selling the Bitcoin to get what? Dollars. Okay, so then I go over and look at what the dollar's doing. If the dollar's going up, it means people are selling assets against the US dollar and putting the money back into it. So dollar rises. When you look at it all, ladies and gentlemen, we are going into, this is a very big moment in the marketplace, all right? And with these revisions, just keep an eye out on this story. With these revisions, you're going to see them putting it up on the news like this, okay? And they'll say GDP has been revised. And the implications are the stock market is just it's going to take a smack. It really is. It really will take a smack. Do you still believe Bitcoin will be at 80K? Listen, man, that's not right. I believe Bitcoin based on the way, look at today. Just look at today. The data came in consistent with higher cuts, more rate cuts, Bitcoin pumps. So just stick with me on this one. We're going to do this little exercise, okay? Bitcoin pumped 4% today on that news announcement, okay? So from the low, it pumped 4%. Cool. We've got another bout of data coming out tomorrow. Let's hypothetically assume they do the same thing. It moves up another 4%. Cool. Don't forget, we also have the non-farm payrolls, which statistically, wait, a little bit more, statistically does bring a lot more volatility. So let's make the assumption, okay, that Bitcoin were to rise again at minimum 4%, okay? That puts us to roughly around 64,000 from that range, hypothetically, okay? On top of that, you've then got other bouts of data. You've got Waller speaking, Williams speaking, okay? They might say something to grant the idea of a higher rate cut on the interest rates. That would then effectively then send Bitcoin up a little bit more. Let's say just stick to that tone itself. Another 4%, we're at 65K-ish, right? Then you go into the CPI data, and then the data that comes out to make them look good. Imagine if they did this and it actually showed that the CPI came in lower, okay? That right there, ladies and gentlemen, will be even better for the Federal Reserve, and Bitcoin won't just move up 3%. It will move up probably about 5 or 6. So then let's just make the assumption it goes up to there. 70K towards the all-time high. So what are we waiting for by that time? After the CPI data itself, we go into it and we then look and see what's been going on. China's got a bank holiday. Japan's got a bank holiday going on to the month September the 16th. We then have some more data or core retail sales. If that comes in lower, then Bitcoin will then effectively move up a little bit more. So let's double it up and say another, let's just move it up to around 11% from, no, let's just keep it at the 4% right there. Keep it at 4%. And then repeat the same thing over and over again, okay? So you got that data on core retail sales. If the economy is doing bad, then retail sales should be lower, okay? Cool. By that time, ladies and gentlemen, you'll have the FOMC press conference. And then when the rate cuts themselves come into play, that would logically then send Bitcoin on a mad little move to the upside. It would effectively need to pump from here 10%. That's Bitcoin's journey, in my opinion. It's a lot of movement from its current price point. It needs to jump 38%. Can that happen? You damned well skippy, as they say. Of course it can move up 38%. It moved up 4% today, and we only had the job openings report. So every bout of data that comes out is leading investors to believe, yeah, we're going to get the rate cuts. Right now, it's up in the air. Do you remember what happened with the Jackson Hole Symposium? We're all waiting for what? Powell to say, yeah, he's going to cut the rates, going to cut the rates, going to cut the rates. He gets up and says the time has come. Bang, we're cutting the rates. Market then starts to move. Okay, and that was where you got your recovery over here from the Japanese yen trade principle. And then they topped it all out. Now, what do they need to do? They need to bring it back down again to start buying it. That's obvious. They're doing a lot of buying in here. Okay, what did I say to you today, ladies and gentlemen? What did we say? Don't look at the orders where they're coming in really small, like 1.4 million, and it's now transacted 16. Wow, like look, that wick to the downside, and then Bitcoin shoots up. You might think I'm a madman, but there's logic behind what I'm saying. Because if every single day they were going and getting news announcements, okay, and we're getting information that is suggestive that the rate cuts are going to be big, the market will plow in and they will make their money, send it up. Damn, we could even get an all-time high in the NASDAQ, S&P, maybe even Bitcoin. We're just going to make sure that this thing doesn't keep rising. We're going to hope that the Fed doesn't do anything with regards to that. But they don't need to worry about it too much. Why? Because they will step in with this if the yields are going up. Okay? But the bonds are rising. So that's good news. So naturally, the yields are coming down, which is consistent with the idea of buying stock, which explains why this dude right here is saying that the market could correct 10% over the next week, 8 weeks. Well, that's 2 months. Election. He's not saying on 8 weeks, over the next 8 weeks. But hey, that's where my head's at. Okay. Now, just a quick one. Just to quickly let you know that the trading competition is coming to an end, 18 hours. All right. Now, we'll probably do another trading competition. Top spots right now, these two dudes right here, and then this dude right here. We don't know the names, but hey. But this is on BTCC. Now, if you are new and you're from the States, get involved and use BTCC, get 10% bonus, but you don't need KYC, whether you're from the States or anywhere, okay? Don't need KYC. With the UK, there is an exception, but for the US, you don't need KYC or VPN. And on top of that, you can trade NASDAQ, S&P, just make your way over to the markets, futures, perpetuals, go down, and you can trade NASDAQ, S&P, gold, Coinbase, Tesla, Netflix, NVIDIA. You can trade all those assets and cryptocurrency at the same time, which is perfect if you're trying to hedge yourself, because there are days when the NASDAQ moves up and Bitcoin goes down. So you can effectively hedge yourself on this platform when you're trading both NASDAQ and the S&P and cryptocurrency overall. Just don't deposit with fiat. You're going to need the KYC. Just deposit with crypto. Happy days. Everything's in the description of the live stream, ladies and gentlemen. So we know that Arthur Hayes has got realistically a valid point about his 50K projection on Bitcoin, only because of the principle of the RRP program. Okay? Now, Scotty Pippen, with his price predict, please, there is no comparison to it. A cryptocurrency exchange CEO using data from the US government on when they are going to inject cash or not has more precedence when it comes to working out what Bitcoin's price is going to do. Hopefully by the end of this live stream, you would have then come to an understanding that the impact that the GDP and the GDI has, a downwards revision on the US economy, is not good news. Once that is actually revised and they come out with it, I won't be surprised if Donald Trump sacks everyone in the Federal Reserve. If you've enjoyed tonight's live stream, ladies and gentlemen,